just reported a terrible jobs report. We had non-farm payrolls grow by 22,000, which is about a third less than what the market anticipated. But the bad news does not end there. Not only did we see weaker job growth, but the unemployment rate increased. And the June numbers actually were revised down, showing the first month of job losses since 2020. So the US labor market, the numbers that we thought were good, that was showing up in the beginning of the year during the summer, really was distorted. And now that the revisions come in, we know the labor market is much weaker than anticipated. And we also have seen the layoff announcements from many American businesses. So it could only get worse. That is why gold has hit an all-time high on the back of the US jobs number. The US dollar has sold off across the board. And stocks are trading higher. Stocks are not trading higher because the market thinks that the weaker jobs number is good for the US economy. Of course it's not. Stocks are trading higher because they think the Federal Reserve will need to be even more aggressive with interest rate cuts. That they'll need to deliver not just 25 basis points in September, but maybe even 50 basis points, because we did see a negative job growth in June and double-digit job growth in the last 2 months. So we are in a position where the Federal Reserve, who is going to be cutting interest rates for the first time this year in September, is not only expected to do a big move, but suggest that more, or signal more, is to come. So the move that we've seen in the market today will probably have continuation going into the September FOMC because it was so bad. I want to hear what you think. Do you think the numbers are as ugly as they seem? And the US is not alone. Canada also reported a big job loss. The market was looking for a rebound after last month's losses, and instead it was 2 back-to-back months of shedding jobs. In general, the labor market is in trouble globally.